So now we're going to look at the big picture and looking towards a post-oil future. I got that wrong, but we want post-COVID as well. So it's so nice to be here with my very good friends and some of my longtime friends. So your moderator for this session is Hicham El Khaoudy, Managing Director and Head of Global Transaction Banking, and he really is fabulous, and he comes from First Abu Dhabi Bank. Hicham.
Thank you, Vincent. Assalamu alaikum. Good morning, ladies and gentlemen. It's my pleasure to welcome you to our session at GTR in Dubai. I'm Hicham El Khaoudy, and I'm MD and Head of GTB for Middle East and Africa at First Abu Dhabi Bank. Before introducing my esteemed panelists, I would like just to give you or set a little bit the scene about our session today. We will try to give you an overview about MENA in the larger sense of things from an economic and trade perspective. But I would like to insist on a couple of points that are quite generic but are driving this region. First, the resilience shown by the countries in the region, and especially the UAE, during the pandemic and post-pandemic are simply amazing. We are seeing how the countries are repositioning themselves into the disrupted global trade supply chain. Another important aspect is the agility in the execution. And I think, as an example, in a world where the travel is restricted, to see the success of Dubai Expo, which crossed 11 million visitors a couple of weeks ago, with 30% coming from foreign countries, is a testament of this. All the startup ecosystem that are developing in the region is also another testament. In parallel, we are seeing some impact on the sovereign debt of the countries in the region. A lot of reforms, especially in the fiscal area, and a little bit of healthy, competitive economic rivalry between the countries. I will stop here and let my esteemed panelists introduce themselves. Scott Livermore, who's Chief Economist at Oxford Economics. Thank you, Scott. Dr. Karen Remo, CEO and co-founder, New Perspective Media Group. Joe Hepworth, Director, Middle East, OCO Global. And Dr. Robert Besseling, founder and CEO, Pangea Risk. Unfortunately, Massimo Falcioni, CEO of ECI, couldn't join us today. And anyway, thank you for being with us today. So my first question will be to Scott. Thank you for being with us today. Can you give the audience an overall overview about the economic situation in MENA?
Sure, and thanks for the introduction, and it's a pleasure to be here with you all this morning. I think, as we've already seen from some of the figures quoted, that the Dubai economy and the economies of the region expanded and rebounded really quite strongly from the worst of the COVID crisis. So if you look at figures related to the purchasing managers indices for the non-oil sector, which measures growth in a non-oil economy, they recovered strongly. Hotel occupancy figures, trade growth, FDI numbers, they all recovered strongly at the end of last year and suggested the economy was on a strong footing. Now, Omicron kind of caused concern. And if I was here a month ago, I may have been a little bit more worried about it. But I think as we've seen the vaccination rollout, booster jabs, ongoing social distancing protocols, the nature of the virus itself means that's taken much less of an economic toll than we feared a month ago. And the outlook is quite positive. If you look at the GCC region, it's probably one of two of the major regions in the world where growth this year will be faster than last year. And the reasons for that optimism are really threefold. Firstly, oil production. As OPEC Plus increases production quotas, that will boost the economy. Travel and tourism. We've already seen how Expo has contributed to the rebound. We've got the Football World Cup in Qatar next year. And the type of social distancing, the type of facilities, the type of connectivity we have here, we have good reasons to expect visitor numbers to grow this year and next year, even after Expo. So we're really positive about the development of the tourism sector. And finally, government policy. The rise in oil prices above 90, dare I say, heading towards 100, relieves financial and fiscal pressures on a lot of governments, allowing them to contribute to the recovery. Even the likes of Oman are expected to increase government spending this year, even though they're in fiscal difficulties. But the contribution of the government is broader than that. We've heard mentioned already visa reforms, 100% of foreign ownership, facilitation, and we can see that in the UAE, Saudi Arabia, Qatar, Bahrain, across the Middle East. And that will contribute to the longer-term growth, the competitiveness of the region. And we have to look at this in a holistic sense. Even the increase in corporation tax here in the UAE, they didn't, but if the government had asked my advice, I would have suggested they do that, because there are so many things more important than the corporate tax level, especially with the global minimum tax, that affect competitiveness, ease of doing business, infrastructure, et cetera, where the country scores highly. And in order to achieve growth and diversification objectives, it's not, the government needs money to spend, so it needs to raise money in an efficient way and direct it to its priority sectors, be that digital, be that creative industries, may that be tourism, may be that trade facilitation. And the government here and across the region are laying a good foundation to ready themselves for the post-COVID era and really grow over the next 3, 5, 10 years.
Thank you, Scott. I would like to rebound on some of the points that you have mentioned, and my question will be to Robert, and who is joining us from South Africa. And the question will be, how does this outlook, or some of the points mentioned by Scott, how does it feed into the sovereign debt sustainability projection for the wider region?
Good morning, Hicham. Yes, unfortunately, I can't join you in person this morning, but it's a real pleasure to be there virtually. I'll just, following up on what Scott said earlier, the Middle East and North Africa region, like many other parts of the world, is only gradually coming out of a pandemic-induced economic crisis. And that will also have consequences for sovereign debt sustainability. Now, declining government revenues in the Middle East and North Africa, combined with the need to support vulnerable sectors of the economy and other policy responses to the pandemic, have led to increases in public debt across the region. Now, although deficit financing needs are likely to decline this year, most countries in the MENA region will continue to borrow in international debt markets to fund diversification programs. Or, in fact, they may be financing to refinance maturing debt. Hence, fiscal positions will continue to be in distress, so to speak, and a recovery of oil prices is unlikely to significantly reduce borrowing costs. But there is a bit of a diversification here, or at least a divergence between the wider MENA region. Among MENA country groups, oil importers have the highest levels of debt. However, hydrocarbon endowments are key differences between the Gulf Cooperation Council and North African sovereign default risks. My company, Pangea Risk, assesses that weak fiscal positions continue to weigh on North African countries, while the GCC sovereign's accumulation of high levels of government's assets support both their fiscal and external positions. And Hicham, I'd also like to say that maintaining high debt, of course, can be risky in the longer term. It can threaten economies' creditworthiness and their ability to refinance maturing debt in the future. And these risks, if they materialize, can result in economic woes, characterized by currency devaluations, for example. Just think back 2 years ago to Lebanon and the ongoing crisis there today. But among the GCC countries, Oman and Bahrain's credit default risk rose the most significantly. This is consistent with the two countries' substantial debt levels. Among middle-income MENA countries, Egypt, Tunisia, and Iraq, risks rose the most over the past 2 years, and more than increases of GCC countries. And then just finally, in Saudi Arabia, due to its largely deposit funding banking sector, external financing risks are much lower. The UAE's economy's external funding needs are also relatively high, again, largely driven by the banking sector. But it is worth noting that the banking system in the UAE has more than sufficient external assets to offset those liabilities. So back over to you, Hicham. I hope I answered your question there sufficiently.
Thank you. Thank you, Dr. Robert. You know, one of the points mentioned by Dr. Robert was about diversification. And here, my question will be to Dr. Karen on something I think close to your heart in what you do on a daily basis. How did this pandemic or the post-pandemic shape the marketing and distribution strategies for companies operating in MENA? So that's a first question. And the second, the other way is basically how do you see the Made in UAE or Made in MENA brand evolving in the future? So we have an inbound and also basically the other side, which is Made in UAE.
Yeah. Well, thank you very much, Hicham. I mean, that topic is really very dear to my heart. So New Perspective Media Group, so what we do is we are in the business of connecting companies to customers and governments to investors, businesses, and people. And so what we have seen during the height of the pandemic and the aftermath of it are actually 4 themes, which probably might be useful for your strategy. Because we have seen some key themes in the innovation and marketing strategies of companies here in Middle East and North Africa, which, as per the very words of Peter Drucker, the head, the very famous Peter Drucker of the management, is that there are just 2 things that every company has to focus on, which is marketing and innovation. So the 4 themes actually revolve on the 4 Ps, which is on the product, the price, the place, and the promotion. The first one is the product. We have seen that product love or product loyalty or brand love has been overtaken, outweighed by product availability. In the US, 75% of the customers actually shifted brands because of the scarcity. So even if you have invested so much on your brand, if it's not available in the market because of the current supply chain issues, then we have a problem, because you have to be very much available. So having said that, what we've seen on our client side is that they have started to invest on their facilities in the UAE, in Saudi Arabia, and in the whole GCC. For example, a major global pharma company has now shifted not only its packaging, not only its distribution, but its manufacturing in Saudi Arabia. So imagine this kind of investment that they're putting in there. Instead of looking at supply chain, they're looking at like putting it there, and it's happening right now. We will be announcing it very soon. At the same time, a major supermarket, a Chinese supermarket, so we used to get the products from China. What we're doing now is we're growing the produce in Ras Al Khaimah. So you see, the availability is very much important. So the distribution and marketing is now happening right here, which is, by the way, connected to the Made in the UAE or Made in the GCC campaign that's happening right now. Recently, because we are also we are the communications agency for Etihad Credit Insurance, we were at the Prague Club Committee of Bern Union meeting just last week. And usually, export credit agencies, they're focused on helping exporters, giving finance to the exporters on their expansion outside. What we've noticed is that on the Bern Union Club, the PCC Club, the biggest growth is coming from domestic funding. I was like, what's happening here? So you would see that what's happening in the UAE, the GCC in the MENA region, is that they're not just after export and re-exports, they're looking at manufacturing. So that's on the product side. The second one is on the price. Everybody knows in this room that shipping costs has more than doubled. And it's really causing a lot of like exporters to cry. What are they doing now? And in addition to that, every PCR test that you pay, it's additional costs. So what are they doing now? So recently, we had the full delegation of the Philippine government for the Philippine National Day at Expo 2020. And in just one day, we have actually received a pledge of 2.2 billion dirhams that will create 4,000 jobs here in the UAE. And that's going to create security of product from the Philippines. At the same time, we also had received a lot of pledges from companies in the Philippines going here in the UAE, in the GCC, actually setting up their own facilities. So people are now on the investment mode. Why? Because they have seen that the supply chain is really eating up their bottom line. Okay, the third line is basically the place. We have seen a lot of corroboration happening and collaboration happening right now. Who would have thought that Ford Motors and GE Healthcare would go together to actually create life-saving ventilators? One of our clients, GTL, is a testing laboratory for halal products. Because of the scarcity, what they're doing now is they're producing their own hygienics products. So imagine that people are now becoming experimentative, explorative, so that that can only be answered by corroboration and collaboration. And lastly is with regard to promotion, the last P. We have seen that because of the first thing that I've mentioned earlier, the brand love. Brand love is very important, but now what we're seeing is that there's a shift of spending from advertising to PR. Why? Because it's much cheaper, it's more credible, more effective, and at the same time, people now want to learn about, like, I am caring for my employees, I am caring for my customers. So these are the 4 trends that we're seeing, which are basically centered on the innovation and marketing strategies of companies in the MENA.
Thank you, Dr. Karen. My next question, talking about corporate, what's your view about the FDIs, or can you give us a view about the FDIs coming into the region and the companies operating in the region, Joe?
Sure, thank you. And I think, like everyone else, it's nice to be back in the room after 2 years away, so thank you to GTR. I think Dr. Karen's just touched on it, that companies are in investment mode. And I think what we saw in 2020 around when COVID started, and obviously the sort of the first year of things when kind of everything was up in the air, was obviously investment stepped back. There was a reduction in investment, but really everything was up for grabs at the same time, because models and standards and processes that companies had always worked to were defunct, were dead. And so everything was sort of back on the table, and we were talking to our clients in the region here around, well, now is the time, don't withdraw. Okay, investment might be down in the region in 2020, but now's the time to be out there, because everybody's recalibrating, everybody's looking again. Now is the time to be banging the drum. And I think then with some of the points that have already been discussed around the supply chain dislocation and over-reliance perhaps on China or East Asia, and that this is actually an important market in itself, proximity to other big important markets, particularly South Asia, Africa. We're doing an investment traction project at the moment for a free zone in Nigeria. And a lot of that investment attraction is being done here, because this is where the MENA headquarters are for so many of your Fortune 500 companies, in MENA and Africa. So I think what we've seen is FDI, I mean, obviously I think in most people's industries, 2021 has been a better year than 2020. Certainly FDI has followed that trend and is continuing into 2022, which I think you would expect to be a bumper year for FDI. But a combination of a lot of the things that are being said, the liquidity from the high oil prices and the sort of the confidence that gives, the need to relook at supply chains and put in production, assembly, and some of those sorts of important elements into the region. And then, what else has been mentioned around the raft of economic and societal law changes that facilitates this, makes it easier for investors to come, to stay, to repatriate, and all of the other things. It's a good time. And obviously within that, you're also seeing a more competitive environment within the GCC, and I think that's a good thing. I mean, it's not just about the rain always falls on Dubai. If Saudi's sharpening their pencil, if Qatar's sharpening their pencil, then everyone has to raise their game. And I think that's also driving some of the laws and things at the moment. You can't just rely on things to come in. So it's an interesting time, and I think if we're sitting here in a year's time, I think we'll be talking about how 2022 was a golden year.
Thank you, Joe. But I would like, given from your perspective, and also Dr. Karen, how is the perception around MENA evolving globally? How do you see it?
Yeah, and I think sort of relating back to the exam question, if you like, on Expo 2020 post Expo, future growth and things. You can't overestimate. The importance of Expo is fundamental to Dubai, UAE, and the region, and particularly now that it's been such a signal success. And obviously we have the FIFA World Cup in Qatar at the end of the year. These events, you say, well, what does that do with investment and trade? These are global mega events happening in our neighborhood, being delivered very well. We assume the same for the football. Raises the level of confidence, the level of interest. I think what's also been, around the COVID response. You've got countries in Western Europe looking at how has the UAE done this so well. So I think perceptions are changing from being a sort of, not sure about that area, there's lots of oil and hydrocarbons there, to actually there's big markets, there's interesting things. You're starting to see, interesting companies sort of organically grown out of here, sort of perhaps future unicorns and things. So I think it's without repeating myself, it's an interesting time from a MENA perspective.
Thank you, Joe. Question to Scott. We talk a lot. We will go a little bit more deeper in non-oil, but oil and energy. I mean, the region remains still like 50% or more than 50% of the oil and gas reserves globally are in this part of the world. What is happening in this sector, which has been the main driver for the growth in the region up to now?
I think that's a good point. A lot of the press around oil and energy is negative, and as if that's old economy. And clearly the countries in the region are focused on growth and diversification and really want to not be so dependent on hydrocarbon. But that's not really signaling necessarily the death knell for the hydrocarbon sector. I think if you look over the next decade, both Saudi Arabia and the UAE have significant capacity, excess capacity, and ADNOC are looking to increase the amount of oil it pumps. So both directly, it's going to be a contributor to economic growth, an important contributor. But I also think the energy sector in the region can be a contributor, if you like, to the new economy. If you try to classify ADNOC or a lesser degree Aramco, I think they look much more like a European oil company, like a BP, Shell, Total, and much less like a Chevron or ExxonMobil. And that for me means that they see energy as important for the future, but they have to modernize, and that will be either new technology around carbon capture, it may be new uses of hydrocarbon, pushing new technologies such as hydrogen. And they're all areas where the countries in the region are competitive. They're all areas where I think we see some market potential. And if they can unlock some of these issues, then they can be really successful about developing the new energy sector. And I guess I'll make one final point. Even if some of the most, I don't know whether it's optimistic or pessimistic, but even some of those forecasts about peak oil happening soon and EVs, electric vehicles, leading to a rapid decline in oil, I think an important thing to remember for the region is in such a declining market, the low-cost producer is king. So it still has success, and I don't worry so much about the oil sector collapsing, and I think it probably offers more for the future than a lot of commentary suggests.
Thank you, Scott. Now a question, now going a little bit more deeper into the non-oil. How do you see, and maybe Dr. Robert, you can start on this one. How do you see the execution of the non-oil economy or strategy, but not only across the whole region?
Thank you, Hicham. Diversification is the buzzword, not just for our panel session, but also throughout the whole region. I'm just going to focus my response on North Africa a little bit, just to mix things up a little bit. Of course, we are at a Middle East and North Africa conference. And I think in North Africa, many of those countries there have emerged from the COVID-19 shock, but the path to full recovery remains very uneven and fragile, quite different to what is going on in the GCC region. GDP growth is forecasted in the region of about 4% last year, and then 6% in 2022, but it's very disparate. The speed of recovery is partly expected to come from varying sources. The rebound in oil prices in countries like Algeria and Libya, and then tourism in Egypt, Morocco, and Tunisia. But of course, that's all open to how the pandemic and lockdowns will traject from here. It also depends on better vaccine production and distribution, and indeed a strong recovery in the region's European trade partners. I am particularly excited about countries like Morocco. To combat the lackluster tourism performance in the kingdom and its drag on economic recovery, the new government in Morocco is aiming to advance pro-business policies, including additional fiscal investment incentives towards the manufacturing sector, particularly automotive, as well as increased public-private partnerships, particularly in pharmaceuticals, as well as expanding the availability of microcredits. Policy priorities in a country like Morocco are likely to include efforts to attract foreign investment in aviation, automotive, renewable energy, tourism, and agriculture-related technology sectors, while at the same time, of course, still trying to recover from the pandemic-induced slowdown. Morocco's government, just to focus on my example a bit longer, has also recently engaged an ambitious reform agenda to raise potential growth and to maintain Morocco's position as one of the most attractive markets in the Middle East region. The launch of a strategic investment fund last year, for example, in cooperation with the private sector, has been supporting the country's economic transformation towards major infrastructure projects. And I'm mentioning Morocco because it's almost the paradigm, the benchmark for the North Africa region. Egypt is very much driving mega projects as well, not just in gas and LNG, but also in building brand new cities, smart cities, or a new capital city, huge infrastructure, transport and water infrastructure projects. And then on the other side, other countries are more confused, they are more struggling. And these are particularly the big oil producers like Algeria. In Algeria, economic growth is expected to remain volatile and highly dependent on hydrocarbon activity, especially on gas. Algeria's external accounts depend heavily on oil and gas sales, and therefore on internationally determined oil prices. So we're not just there throughout the whole region yet, Hicham, but some countries, particularly Morocco and to a certain extent Egypt, are putting a more, are moving towards an economic diversification spread and moving into the non-oil era? Thank you.
Thank you, Dr. Robert. We're coming to close to the end of the session. I would like to end with one question. At what extent the integration between the countries in MEA or MENA can go? There are a lot of initiatives that are being done, but at what extent can it go from your point of view? We can start with Scott if you want, and then.
Well, I'll try to be brief. I think Joe touched on it earlier, and there's a lot of discussion and maybe some concern about all the countries in the GCC are trying to do the same thing. They're trying to diversify, they're trying to grow the hydrocarbon sector, they're very much focused on travel and tourism, digital, new technologies, et cetera, and I guess in answer to your question, it's probably more of a concern that it becomes a competition that's viewed as a zero-sum game, which is negative for the region. And there's some signs, be it from Saudi policy, around regional HQs or tariffs on trade from the UAE, that could cause that. But I think there's also more signs that a rising tide floats all ships, and I think it's important to remember that competition is good. It will drive efficiency, it drive growth, and it's less worried about coordination, but it's more making sure that you should concentrate on improving your own policies, getting the right business environment to the benefit of your own economy and everyone. And because you look at US and Canada, they're intensely competitive. That's not a problem, they both benefit. If you look in Europe, Germany, France, UK, there may be disagreements, but they're intensely competitive, but they work together and they can operate in the same space. And I just kind of hope the GCC in particular follow that path.
Thank you, Scott. Joe or Dr. Karen?
Okay, sure.
Yeah.
Definitely, there will be a lot of competition, and this is very good for the business because competition brings out the best. Now, sooner or later, they will find their own niche, and it's something that has to be done anyway. You have to find your unique selling proposition as a country. Now, in the UAE, for example, like everybody is doing the non-oil diversification strategy, but what have happened so far since they've launched this strategy? Now we've seen Rack Ceramics, it's one of the best in the world now. Now you have Strata, who's basically found its niche in aviation parts. And then you've got Imal, Emirates Aluminium, EGA now, Emirates Global Aluminium, top 5 in the world. So basically, what needs to happen is that they find their strength. Because yes, they are interconnected, the MENA countries, but they are not integrated. So what is needed is a finding of the USP.
Thank you, Dr. Karen. And the final...
Sure, I think sort of maybe an example of collaboration and things is, we do quite a lot of work with the British government now. The mood music coming out of sort of London and the embassies here is that free trade agreements are progressing. And that's not with the UAE, that's with the GCC as a single block. Now, 2 years ago, that would have probably been impossible for reasons that we're all aware of. So, I think everybody is watching how that goes. Obviously, the UK is but I guess the point is the UK is not the only one who's interested in that, because if the GCC is returning as a sort of cohesive block, that's good for everybody. And so I think, a good trade deal for both sides with the UK in the next year or so is augurs well, I think, for everybody, and because it shows the GCC's back as a body you can do business with.
Thank you, Joe. So we have to finish.
No, Hicham, you're not getting away that easy.
Yeah?
No, you're not.
Okay.
We got a few questions on the app. So they've given me the questions from the app because they know I will ask anything that comes in. So the first question is, I'm not sure it's from Hicham, it's in terms of the situation in Eastern Europe and the political risk. What do the panelists or a panelist think is going to happen to the pricing of hydrocarbons? And I guess this political risk is on the border of Ukraine, even though he didn't say it. Some people are looking over the border. If they take the step, what's going to happen? Big question for a big panel.
The economists need
Shall I take that? I think we've seen a little bit of what's happening already as oil prices push towards the mid-high 90s. I think if, as you say, Russia dips its toe over the border and there is an invasion, then I think likely the risk premium on oil prices will see oil prices break through $100 a barrel. Exactly how long it persists partly depends on the nature of the conflict and also partly depends on how OPEC Plus chooses to manage the situation and manage supply. And I think that there are probably big questions that we'd have to answer.
Very good. Hicham, I have one or two more. And the next one is, with Expo wrapping up, and it's been a wonderful success, is Saudi going to take over in terms of the Center for International Trade and Finance? That's the question.
Look, I think Saudi is undoubtedly and obviously the prime regional market. It's 3 times as big as the UAE population, spending power even more so. So if you want to be in the region, in the biggest market, Saudi's your play. But I think what has been established in the UAE, and particularly in Dubai, but throughout the UAE in the last 30 years, is not something that you can replicate simply in terms of this, in terms of the offices we go to, the homes we live in, the schools our children go to, the hospitals where we're looked after. That's generational, that's cultural change as well. So I think, I don't think the UAE will lose its primacy as the regional business hub for, I don't not to say ever, but for certainly in my career.
Wonderful answer. And Hicham, just one last one, if I may, and then we'll have our break. And the last question, maybe Karen, this one is for you. I don't know, Hicham, you're the chair. Is, you know, with Western governments in a muddle, that's what it says, is there an opportunity for MENA, and particularly the UAE, to take the lead in the world?
That was the goal. That has always been the goal.
Okay.
So the UAE has not put it as a regional leader. It has always put the goal to be a global leader. So yes.
Wonderful. Well, a round of applause for this wonderful panel. Hicham, thank you so much.